foreign investors are flocking to China in early 2022, seeing it as a haven from inflation, growth and pandemic problems in other markets. Despite being hurt by Beijing's regulatory moves last year, global fund managers are pouring money into mainland equities and bonds, despite betting China's stability pledges, monetary and fiscal easing and subdued inflation them in other markets can shield against instability. This is in stark contrast to the situation elsewhere. Major central banks are preparing to roll back additional stimulus measures of the past few years, and the Federal Reserve is increasingly tightening monetary measures to quell ongoing inflation, potentially eroding stock prices and earnings. For David Daly, head of portfolio strategy at Matthews Asia, China is the single preferred country among the nearly 30 investable emerging equity markets in 2022. We believe that the Chinese valuation is the least risky and most attractive of all the major markets, Daly said. Fidelity International also considers Chinese stocks attractive from a global perspective. Read also, Brazil's health minister has tested positive for COVID-19 in New York. The change in China's policy is very clear, and recent data indicates the economy has stabilized, said Su Wenkun, Shanghai-based fund manager at Fidelity. That's evidence of the uptick in foreign net inflows into Chinese stocks through the Stock Connect scheme, which hit a record high daily average of $413 million during the first 3 weeks of 2022, according to Morgan Stanley. Flow was strong in 2021, with a record $67 billion invested through the Connect channel in onshore equities. But the mainland blue chip index fell 5.2%. As opposed to a nearly 27% rise in the US S&P 500 and double-digit gains in most European indices. According to Morgan Stanley, overseas purchases at the beginning of the year were concentrated in the banking, materials and capital goods sectors. UBS Securities said both foreign investors and domestic mutual funds had allocated to hot topics such as new energy and manufacturing.